Hi everyone, welcome to Quantsapp. Today we will understand about the mistakes that we make quite often or not in the market. And these mistakes are pretty common, and we might be knowing inside that I am going to make a mistake and still we go ahead and do that. And this is something what even experienced traders are doing out there, and also few of traders who have started in options trading. So these are pretty much common mistakes which I have came across. So to start off with the first mistake, so we spend a lot of time in just forecasting the market, that where the market will go in some days or in next couple of days. So we invest 90, sometimes 100 percentage of the time just knowing where the market will go. But we spend very less time in actually analyzing the strategy, actually building a right strategy for our forecast. Obviously, I'm saying that having a forecast it is mandatory in the market, but only having a forecast will not actually help you a lot. So it should be a balance, that if you are spending, let's say, 60 percentage of the time in forecasting, then spend 40 percentage of the time also in strategy building and in analyzing the strategy elsewhere. Let's give me a simple example. Let me just give you a simple example. Let's say this is where your target is. Okay, let's say you are bullish on the market. Let's say this is where your target is, and assume that this is where your stop loss is, and this is your target and this is your stop loss. Now what I mean is, let's say you build a strategy that you assume that the market might go up till here, and this is what your target is and this is what you are aiming at. Let's say the market goes till here. Okay, this is how the market goes till here. But the moment market goes till here, your strategy that you have picked up, that doesn't give you any return. Then does that make sense for you to forecast so much of time, use so much of indicators, use so much of analytics, and decide that the market will go up, but the market went up but you didn't make any returns from the market? Then that doesn't make sense, right? But yes, if I tell you that okay, if this is your target, and just by choosing the right strategy, you can make more returns if the market goes here. Let's assume that if there was a normal strategy, whatever it could be a bull call, it could be a long call, anything. But let's say if the target is achieved, then you would have made, let's say, 1 rupee. But now, due to optimization, due to the time that you have spent on the strategy analysis, the same 1 rupees has now turned to 1.5 rupees if the target is achieved. So this point 0.5, it acts like a big alpha when you are looking at a broader picture and when you are trading options for a long term. If you are trading for a year, or just if you are just planning to trade maybe for a couple of years, then it might not make a very big difference. But if you are taking options trading as a full time game, then you should focus on these small alphas as well. I would say this will create even a bigger impact, even a smaller time frame as well. But the idea is that I want to pick up such strategy which makes me more money if my target is achieved. And even if my stop loss is hit, it takes some small amount from me. I'm okay with that. Basically, I'm trying to optimize my strategy instead of optimizing my forecast. Okay, I will have the forecast. Let's say I am bullish on the market. I will be bullish on the market, but I will spend more time in strategy analysis as well, in strategy choosing as well. So how to choose the right strategy? So if this is the mistake, how can we go ahead and fix that? Always, okay, always before you go ahead and take a trade, not afterwards. First, come to Options Architect. This is a payoff structure. It will show you a payoff structure. It will build us a strategy. Give inputs about your strategy. Let's say I am bullish on Nifty, so I am buying a call option. Assume that the market, my target is 20,000. Now, if I hold this till expiry, I am making 4,500 rupees of return on one lot basis, which is for me good enough. If let's say my target is this, which is 19,930, and I'm expecting this target to get achieved by expiry, then I'm just making 1,000 rupees, which is not okay. I'm not making a good return on the risk that I'm taking. So what I'll do, I'll just convert the strategy. So always the starting point should be the long call. Whenever I actually go ahead and trade, my starting point always is a long call, and then I will try to convert it into bull call spread, and I'll check that okay, if at 19,930, am I making more returns? The answer is yes in a bull call spread. till the expiry I am making 2,800, which is 2 times or even 2.8 times more than the long call which was making. So see, this is the big difference. The 1,000 rupees of profit or 1,800 in this scenario is a big difference. On a one trade, it would look very small. Consider taking 10 trades and the target is same, everything is same, but this strategy gave you more return. So what I conclude is that by forecasting, you have very little control on the market. Where the market will go, you have no control over that. But the strategy that you are picking up, you're absolutely, it's in your hand because you are going to place the order on the terminal. So always spend some time in strategy building as well. At the beginning you would say that it's a very small amount, why should I do all these things? But trust me, for a longer duration, if you do this consistently, it will add a big edge to your options trading portfolio. Apart from that, if I directly want something which is really optimized, just go for Optimizer. So just search in the search panel for Optimizer, go for find strategy, select the instrument, let's say Nifty. You can do it manually, but if you want a straight away answer, just go for Optimizer. Select the target date. I am expecting the target to get achieved by 26th of July. This is my target. This is my stop loss. Optional parameters. Let's say I am ready to lose 10,000, 5,000, whatever input. It's basically one's risk appetite, what you need to give input. Then I want a limited risk strategy. I don't want a strategy which might give me an undefined loss. And just hit apply button. So now the strategies what will be recommended by the optimizer, which will be scanned by the optimizer, those would be most optimized options trading strategies. Okay. So if you see target profit on a bull call spread, I am making 6,000 rupees at the 20,000 level. So basically, if you don't want to do it manually, always you can choose optimizer. It is based on statistics, it's based on mathematics. It will give us the strategy for our forecast that we have. So that's the first thing, which is focus more. If I just give you one word or one line, focus more on strategy building as well. Now coming to the second part. Okay, so what I see is a lot of traders, they actually first take trades and then they go ahead and analyze the situation. So never do that. Matlab, if you have already taken the trade, what will you do after the trade has been executed? What will you do analyzing that? What's the whole point? There is no point, right? So whenever you are trading in options, always it is better that analyze the strategy before you execute it, not after it. So simple, you all you need to do is just go to architect and just give inputs about your strategy and just check if it is making money or not. Just go to custom strategy, add whatever your strategy is, check the break evens. If you are okay with the break evens, only then you go ahead and deploy that particular option trading strategy. Now coming back to another mistake is a lot of time we anticipate moves very early. That means we preempt something that might happen. What I mean by this is that let's say I want to take a trade, let's say, but I will only take a trade when this high is getting taken out. Assume that I am trading in the market and this is where I am going to take a trade only when this high is broken. So what generally we do is we actually go ahead and create a trade the moment market reaches here. If you see, there is still a tiny gap between the breakout level and the place where we generally go ahead and take a trade. Trust me, this 10-15 points ka gap won't make any big difference in your portfolio. So, but still we go ahead and try to preempt a lot of moves. So your trade is that only if this high is getting broken, if something like this happens, only then you will go ahead and create a trade. So only go ahead and create a trade if something like this happens, not because you're preempting it. Don't do it because you think that this will happen. Only trade when the chart is showing you something, the data is showing you something. What I mean by this is it's very simple that always wait for the data to build, always wait for the entry and exit points to get triggered. Don't preempt anything in expectation that this will happen and happen only. Sometimes you may see that the market might reverse exactly from this level, right? So that's the reason always wait for the pivotal levels to get triggered. Now coming to the other aspect, we actually keep on strategies, like we remain in the trade for a lot of time, especially when we are buying options in expectation ki aaj nahi to kal it will go in our favor. But trust me, when we are trading in options, the theta, it plays a very big impact, and it takes away a big chunk of your profits away. So never stay, in an option trading strategy for more than 3 to 4 days. For a monthly option, I'm talking about 3 to 5 days is maximum that I would like to be in, because the theta would decay so much, I might not end up making anything. For a weekly option, 2 days maximum is what I would prefer, because the theta will hurt me so much that I will again not end up making a big chunk from the option trading strategy. Apart from that, some basic checks what we actually miss out on doing. So always check for ban list. Check if the stocks that you might pick up, those aren't those possible entrant in ban, those stocks aren't already banned, right? So just have a look on these ban list data points every day before you start trading. Your brain will be automatically trained that okay, this stock you will remember. Obviously, you don't need to go ahead and give any exams as such, but still, your brain will be trained knowing that Delta Corp is in ban, Balrampur Chini is in ban, PNB has been banned. So you don't need to worry about these stocks again when you are trading. So basically, the entire effort of analyzing, then creating a strategy, and then learning that the stock was in ban, it actually will get reduced. So always every morning just have a look on ban. Also, you can have a look on ban list around 2:45 as well, so that you will get to know which stock might enter the ban in the next day. Now, last thing is always keep your option trading portfolio open to various strategies. Obviously, choose what you like a lot. You like directional trading, you like non-directional trading, but always keep it open, because sometimes what would happen is the market might not trend at all. Sometimes the market might keep on, going either ways, volatile. So for that times, you need to have some option trading strategies, what you can choose for, what you can opt for. Let's say you are directional trader. Okay, let's assume that you are trading only direction. But what will you do if there is no trend that exists in the market? You can't help it, right? So at that time, try to go ahead with the non-directional option trading strategies. Something like volatility trading is must have in your option trading portfolio. Option writing here and there. So keep it more like whatever you are doing good. That means if you are doing good on directional trading, keep most of the portfolio on directional trading, but also don't ignore volatility trading and option writing, so non-directional trading basically, and keep your option trading portfolio much more dynamic rather than staying constant to a simple thing that happens each and every day. Also, start using trailing stop losses. Start using moving averages as your trailing stop losses, VWAPs. Those have been pretty good indicators to actually cruise the trade, cruise the profit. And apart from that, that was it from this side, my side for this particular video. I hope I added some value through this. In case of any doubt, query, question, concerns, you can reach us out on support@quantsapp.com.